Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to take a quick look at Walmart and LMT. Both of these are coming up for earnings kind of on the horizon, and one of the main things that I see that people will get into situations on, or at least last quarter this was kind of a thing, I was just looking at something and saying, okay, this has a really good chart, we've got a voodoo line overhead, and I'm going to buy it for the push into those prices without acknowledging how the underlying has been acting in and of itself. You know, what is the personality of it like? What does it act like in relation to its pullback into the 21, etc.? So this chart I just feel is a really good example of, even though this looks really great, I think it makes a lot of sense to be patient and look for this pullback back down into your 21 EMA, because that has been a historically, over the course of the past several weeks, an excellent place to pick those up. So the contracts I've been focusing on are out here in May, and the main idea behind this is that I'm looking to ride the increase in implied volatility, ideally get the delta or the directional side of the trade right, pushing up there into that voodoo line, but then also staying patient and trying to get them at the best possible price. That entry, if you can wait to get it, just makes the entire position much easier to handle. If we look at LMT, I think this is a very similar situation, because you've got a daily squeeze that is fired long, so that's definitely bullish. You come back and take a look at a weekly, and this also looks extremely bullish. But in this market, trying to maintain the edge has been very helpful, and I look at this more for a pullback down into about 220. You can see how that's been a pretty important area for this one. Notice how that's also right there with your 21 EMA. And then if we get that price, I think that's the area that you want to step in and really try and pick up these options. Now, a couple of ways to do that. One that I'll be looking at here with LMT is coming out into your next series of options, because these are the series that will have the best impact from the implied volatility, and then just saying, if this were to pull back, let's call it $4 or so, what would that $4 pullback leave me as far as the pricing of my options go? So using theoretical price and assuming that this happens, let's just say over the course of the next 3 days or so, we would type that in here, get a feel for what these options are going to be trading for, and then this will tell me that if I want to come in and try and use the theoretical price on this of around maybe $2.80 on these at-the-money calls, or 130 if you want to go further out of the money, I think those would be an okay place to participate in the run higher, and will definitely be more forgiving when you can get them at that better price. So those are two ideas that I'm going to be looking at here in the days ahead. Really try to finesse and time those entries as best you can. And then one last thing I wanted to make sure you were aware of was the continuation of Bruce's defense course. This has been something that he has been progressing through. It got started with on last Tuesday, and it's been a really helpful thing in looking at how, when you get yourself into a position, if it doesn't really work out, what type of options do you have to work around it? So I know we've all found ourselves in those types of positions. Bruce has really put together a lot of great content around it, and if that's something that you think you might find helpful, you can still sign up for the remaining part of these courses, get the recordings from the first at the link of the end of this video. So I hope you guys find it helpful. Enjoy the rest of your evening, and we'll talk to you at the next free video.